when I invest, it's going to be after-tax money that I'm investing into it, but I can borrow tax-free, and then anything that's left over in the policy is going to be paid out to my beneficiaries tax-free. Um, Find me a policy that's going to work for me. What's your response? I want to save up. Let's say I want to put $100,000 into it, and then I can borrow. So the scenarios I see on the internet all the time, I put the $100,000 into it. I can borrow the $100,000 back, and I still have the life insurance policy. Is that true?
You see how you're leading to that question? I don't know. The answer is I don't know because I don't really know that scenario. I need to know around it. What's happening? You have more retirement assets. Do you have a home? You know, you have kids. All these things I need to know to make sure that that specific scenario will work for you.
Okay.
That is the problem. When somebody goes online, TikTok or YouTube, whatever, whatever podcast, it's a very specific problem and it's solving a very specific issue. Right?
Yeah, so usually when they come to us looking for a very specific product, like you said, what we do is like, okay, let's sit down. We go through the whole process, like ask them the questions, create the plan. And honestly, maybe only 1 out of 10 times that was the product that actually fits them or it's the best for them.
When you play out all the scenarios and you show them the reality of the scenario. For example, one reality that I've seen, because I do have whole life, and why I got into it, I can't remember because it's been probably 20 years. But I do have a couple whole life policies. You guys are my advisors. You know of those policies, and you're permitted to talk about them, so go for it. But I know that I can't borrow as much as I've put into those policies. So the concept that I can go out there and buy a $100,000 policy and then borrow that money back and use it while the policy is still in effect, I have not seen a policy like that. Normally you can borrow up to 80% of the cash that you've put into the policy. I've never seen a policy, and I don't see them as often as you do, but I haven't seen a policy where you can borrow 100% of the premiums that you've paid on the policy.
It's all about timing. Everything is about timing and how much you fund that policy.